Okay, let's just address the elephant in the room. Silver just crossed $100 an ounce. For years, that number wasn't just a goal, it was a complete fantasy. And now, it just happened.
I mean, think about it. Just a few years back, we thought $30 was getting pricey. Then at 50, everyone screamed bubble. Now we're at 100, and you can practically hear the chorus of people calling the top.
But are they right? Is this it? Is this the big cool down? Or is it just the beginning of something totally new for silver? That's the big question, and that's exactly what we're here to unpack. All right, so to really get a handle on where silver is headed, we have to do something tough. We have to look beyond the price charts. We need to focus on what's actually powering this move: demand. And let me tell you, the story of silver demand has been completely rewritten. You see, in markets, memory is a powerful, powerful thing. Most of us, and I mean professional traders too, we're all kind of anchored to the past. Our memories of how things went down before, well, they totally shape how we react today. And when it comes to silver, there's one ghost that haunts the market more than any other. And yeah, I know exactly what you're thinking. Is this just 2011 all over again? Right? A massive speculative bubble that's about to burst? And look, it's a totally fair question, but asking it misses the fundamental, ground-shaking shift that's happened under our feet. Because this is a different kind of rally. This isn't just a story about speculation anymore. Nope. We are in a brand new era, one that's defined by a head-on collision between financial markets and, well, an industrial reality that just doesn't care about the price. Just look at this, a tale of two rallies. Back in 2011, it was all about speculation, all heat, no substance. Today, it's driven by real physical demand. Back then, industrial use was like a minor detail. Now, it's the whole show, critical for things like solar and EVs. The very foundation of the silver market has been ripped up and replaced. I mean, look at that. A whopping 60%. 60 of all silver demand now comes from industry. Think about what that means. Silver's price is no longer just a reflection of investor sentiment. It's physically hardwired to global manufacturing and, you guessed it, the green energy transition. And this industrial demand isn't just huge. It has a superpower. It's what economists call price-inelastic. And trust me, understanding this one concept is the absolute key to seeing why $100 might not be a ceiling, it might be a launchpad. So, what on earth does that mean in plain English? It's simple, really. It means that for certain things that are absolutely critical, industry has to keep buying them, even if the price goes through the roof. Why? Because the cost of not having that little component is way, way bigger than the cost of the component itself. Let's take EVs, for example. A regular old gas-powered car uses, about 18 grams of silver? A modern EV? Bam, more than double that, around 45 grams. As the world keeps shifting to electric, and it is, this creates this massive structural wave of demand that literally can't be turned off. So here's the kicker. For these massive industries, the cost of silver is basically a rounding error, but what it does is mission critical. In a solar panel, it's less than 5% of the total cost. In EVs and electronics, you can't just swap it out for something cheaper without killing performance. And for our power grids, come on, they're always going to choose reliability over pinching pennies. They literally have to keep buying. Okay, so if this relentless, insatiable industrial demand is the new normal, how should that change the way we think about a massive price breakout? Like the one we just saw at $100. Well, usually after a big psychological number like this gets taken out, the market kind of follows a predictable pattern. First, you get that crazy, rapid move up. Then, naturally, people start taking profits, things get a little choppy. After that, it usually settles down, moves sideways for a bit in what we call consolidation. And then finally, the market figures out the new price level based on these new fundamentals. So seeing a correction, that's not a crash. It's a totally normal, even healthy part of the process. And this right here, this is probably the most important concept for the new silver market. In a rally that's driven by real demand, what was once a resistance level, a ceiling, very often becomes the new structural support, a new floor. Why? Because that inelastic industrial bid is always there, just lurking, waiting to scoop up any weakness. And we see the proof everywhere. Industrial fabricators, they're hedging, locking in prices for way out in the future. The big buyers are signing forward contracts. Meanwhile, available inventories are historically razor thin. So what happens? Every little price dip is met with this huge wave of real physical buying. It makes the price so much more resilient than it used to be.
So, if the history books can't really guide us anymore, what should we be watching to figure out where silver goes from here? Look, it's not about the crazy day-to-day headlines. It's about focusing on a few core fundamental drivers. Silver's future, really, it all boils down to these three things. First, the pace of electrification. Simple. As long as solar, EVs, and new grid projects keep growing, that demand is just going to keep compounding. Second, substitution risk. Is there something cheaper that can do the job? Right now, the answer is a hard no. Nothing comes close to silver's performance. And third, recycling. Can we just recycle more to fill the gap? Well, it's slow, it's difficult, and it just can't keep up with the new demand. And as of today, all three of those dials are turned up to 11, pointing towards a really tight market. So the big overarching takeaway here is that silver is going through a fundamental identity crisis. In a good way, it's shifting from being a precious metal, a kind of luxury trade, to becoming a strategic industrial input. It's joining the club with things like copper and lithium. It's a utility now.
And look, if you only remember one thing from all of this, let it be this. Price is just the symptom, it's not the cause. Price alone will not decide silver's future. Real, physical, inelastic demand will. Which, of course, brings us to the most important question of all. Forget the price on the screen for a minute. What are the real-world signals we should be watching that would tell us that industrial demand is actually starting to slow down? Because that, not some headline, not a talking heads price target, that is what will mark the true top of this cycle. And that's exactly what we're going to break down next time.